Welcome to the Zions Bank Economic Update. I'm Deb Speed, and joining me is Robert Spendlove to talk about Britain's historic vote to leave the European Union and the impact that decision will have on our economy. Robert, why don't you start by explaining what the Brexit is and what it means?
Sure. So the word Brexit stands for the concept of Great Britain exiting or leaving the European Union. Now, Great Britain has been part of the European Union for over 40 years, and they've been one of the most important parts of the European Union. However, over the last few years, there's been growing sentiment and growing sentiment of people being upset about the way that Great Britain had their relationship with the European Union. So, for instance, those in favor of the Brexit or in favor of leaving the European Union said too much power had been moved from London to Brussels, and too much of their sovereignty had been given up to other countries and taken away from Great Britain. There was also a lot of concern about immigration. There was concern about immigrants from the rest of Europe coming into London or coming into all of England and taking away jobs from the residents of Great Britain. Now, on the other side, those that wanted Great Britain to stay in the European Union argued that there was great benefit from the collaboration and working together and trade agreements between all the countries, the 38 countries of the European Union, and that everyone was better off economically and culturally being together rather than separating off and becoming more independent.
So the vote happened and they decided to leave. What was the initial reaction?
So virtually no one saw this coming. Equity markets weren't predicting it. Forecasters weren't predicting it. Even futures markets weren't predicting it. So everyone was surprised by this. And when an event happens that has such a big impact that virtually no one sees, the impact is dramatic. And one of the things we know for sure is that this exposed that even very sophisticated investors and analysts essentially missed this and didn't see this coming.
So what's going to happen next?
Well, we can kind of look at this in three ways. We can look at the initial impact, and then the short run impact, and then the longer run impact. The initial impact is what we're seeing right now. So world markets, because this increased a greater amount of uncertainty, because this exposed that people weren't expecting this to happen, markets have reacted very dramatically and very negatively. For instance, in Asia, the Nikkei is down almost 8%. It's at lowest level since 2008. In Hong Kong, the Hang Seng has dropped almost 3%. In Europe, the Europe Dow has dropped 9%. And then in the UK, it's a little bit less. The FTSE is down about 3%. But then in both Italy and Spain, their stock markets have dropped over 12%. In the US, the markets are down about 3% also. The Dow has initially dropped at its opening about 500 points and has remained at that lower level ever since the announcement. So markets are much lower. When we look at things like the pound actually dropped about 11%, and because the pound went down, the dollar is up. Gold is also up. So when we have increased uncertainty, you see higher prices in gold, which is what we're seeing in the markets in the short run.
So that was the initial reaction. And then you mentioned there will be short-term and long-term consequences as well. So
short-term, I'm defining as the next few months. Mm-hmm. And what we've already seen is Prime Minister David Cameron has announced that he is resigning from office. So there will be a new election in the fall, and a new government will be elected in Great Britain. David Cameron was one of the strongest advocates of Great Britain remaining in the European Union. And he said, with this decision, I no longer can lead the country, and we need to elect a government that represents the will of the people. So that's going to be one of the big ones. And then also now the government of Great Britain will start the process of renegotiating all of their trade agreements, all of their contracts, mostly with the European Union, but then also with countries throughout the world, in Asia and South America and Africa and the United States. So that process will start soon, and it will go on over the next few months.
And then long term?
Long run is one of the tougher ones to figure out. What we know for sure is that because Great Britain has disconnected itself from the European Union, it will have a negative impact on their economy. Their economy will drop, and it may drop into recession. Because they're going to have less buying power, because they're going to have less ability to negotiate, it's going to have that impact. Now, the question is how much this will have an impact and how long it will last. But what we know for sure is that in Great Britain and throughout Europe, uncertainty will be much higher than it's been in the past.
So what about here in the United States? What does that mean for us?
So like we talked about, with a weaker British pound and a stronger US dollar, that creates a really troublesome economic dynamic in the United States. So a strong dollar is good if you're planning on going on vacation to London, but it's really bad if you're a producer trying to sell a product to the British consumer, because a strong dollar makes American exports more expensive relative to the rest of the country. And when they're more expensive, it's hard to market them. And so what we'll see is a slowing in our ability to export goods out of the United States, which means a slowing in economic activity in America. And so that will have a negative impact on our overall economic growth, on our GDP, and on our economy. So the question now is, what does the Fed do as a response? Back in December, the Fed committed that they were going to continue increasing interest rates to try to normalize our rates throughout the year, throughout 2016. However, with a stronger dollar, with the prospects of a weaker economy, the Fed is going to be very hard-pressed to continue increasing interest rates. And now there's starting to be increased pressure for them to actually start cutting interest rates. So there's much greater uncertainty on that front as well. However, one of the really important things to keep in mind is that the United States and England have a very strong and enduring relationship. They have strong trade relationships, strong cultural relationships. And our political leaders and other people throughout the country and throughout the world have committed that this will not change because of this, and that we will continue to have a very strong and enduring relationship.
Well, that's good. And I guess the takeaway is that this is going to have far-reaching consequences that we might not even be able to see yet.
Exactly.
Thanks, Robert. And thank you for joining us for this economic update. For more information and analysis, please visit zionsbank.com/economy.